everyone to a new episode of the Winning with Insights podcast. My name is Mike. I am the founder of GTM Diagnostics, a market research company specialized in win-loss analysis. Today, I have a special guest, Jona. He's the Chief Revenue Officer at OpenTheBox. OpenTheBox is a company specialized in private market data for banking and investment, and OpenTheBox is a part of Mediafin. They are a Belgium-based company. Jona, thank you so much for joining me here today. Before we get started, could you please introduce yourself to the audience?
Yep. So I'm Jona. I'm the Chief Revenue Officer at OpenTheBox, as Mike has said. I've been in this role for a little over a year now. I have a background in several parts of GTM, mostly a lot in marketing and some in sales. So I'm a bit of an unusual CRO coming from more of a marketing background, but I think that's really important in modern GTM.
Yeah, I am definitely on the same page with you when it comes to marketing playing a very big role in the success of any business nowadays. Well, it's quite funny that you said it's like an unusual background. Like, what? Why would you say that?
Well, I think especially nowadays, coming from the era in GTM that we've been coming from in GTM and SaaS in general, most VP revenue or chief revenue officers, similar profiles, come way more from a sales background, and see marketing, I think, mostly as a lead gen tool. Ideally, or they have a very poor opinion of marketing and see it more as arts and crafts. So to come from marketing into a CRO position is a little bit different, also because you're now overseeing sales, and typically you'll also sometimes be working with people that you're in charge of that actually might have more experience in sales than you do. So it's a bit of an unusual one. It's challenging, but I think it's very fun, and I think it's a sensible new way of filling a position like that. Of course, I'm a little
What?
bit
What?
biased.
Can imagine, but that's okay. Everybody has biases. That's okay. Well, what would you say makes a marketing professional qualified to, well, be in the position of a chief revenue officer?
um, I think it's not necessarily a marketing person. I think in general, for a chief revenue position nowadays, I think it's good to have experience in several parts of the funnel, and understanding of what the other roles are. And so in that sense, it becomes a competitive edge, I think, now to be someone who has seen the other side, understands both sides, and also why collaboration in so many companies actually goes wrong between the silos. I think uh, it's sometimes underestimated how fundamentally different the mindset has to be in those different roles. Um, and if you understand what every role is really all about, then you can effectively manage it and create a revenue factory, I think.
Ooh, revenue factory. That's a very different topic of discussion.
Yeah.
I am also a very big fan of the winning by design
Yeah.
frameworks, basically the revenue architecture, revenue factory, the bow tie data model. It's
Yeah.
something that we use as well for to analyze and segment um, basically the acquisition side of things, and also more on the right side of the bow tie to
Yeah.
see like, hey, which are the best performing segments. But today is not a not about why marketing leaders are the best CROs or not, and it's also not about the bow tie data model. We're going to talk a little bit more about what Open the Box is and what you're actually solving for your customers. So before we get into this and make a deep dive, can you briefly explain a little bit what OpenTheBox is and maybe share some of the background that went into OpenTheBox basically starting out?
Yeah. So let me start with what OpenTheBox is today and what we're growing into. Uh, we are a data platform, first and foremost, and we're building more and more of the workflows that go along with the data that our customers are looking for. So, it's a jobs to be done kind of approach. When you buy a drill, you really want a hole in the wall to hang a family picture or something. So when you come to us for data, you're really looking for insights. You're really looking to basically qualify an investment into a company or spot the right type of investments. You want to provide the right kind of advice for your customers if you're in banking. So we provide those kind of insights by going further than just being some kind of big log, some big database. What
Yeah.
we do is already run some of our own statistical analysis, and that's all machine learning. That's a big plus. So when you look at the box, you see charts, you see insights. You don't just get the raw data. And then we go a little bit further by also providing that analysis even as an endpoint in our API, so that our more advanced customers can actually build a bit further on top of that. And that's where we're different than other data providers. Then what we're also unique at is being able to deduplicate the entrepreneurs behind companies. So where, for instance, if you would go to Companies House in the UK or the KBO in Belgium, Staatsblad in Belgium, you would actually, if one entrepreneur has 10 companies, you would typically find that an entrepreneur 10 times in the database,
Yeah.
and we are able to say which ones are the same. So in Belgium, someone with the name Jan Peters, you will probably find 100 of them.
Yeah.
So which ones are the same? That's important. That also enables us to show in a kind of network visualization which companies someone is involved in and which other people
Hmm.
they are in business with. That's crucial information. Or when you're preparing a deal, or as a private banker, for instance, when you're providing advice, you actually want to know as
Yeah.
much as possible about
Yeah.
the person, because information is key.
Yeah, you're already going a little bit deep on this side already. So um, just to get like a good understanding, so because you are a private market data provider specifically for banking or private banking and investments, you have a very narrowed down, um, well, ideal customer
Yeah,
basically. And you mentioned like the jobs to be done
yeah,
framework. So, could you perhaps elaborate a little bit more on what types of use cases you actually support and what like the jobs to be done mean for Open the Box?
yeah. So we see our customers, for instance, actually use OpenTheBox to prepare a meeting with their client if they're in private banking. So that means they are looking at how much equity have they been building up, what have they paid themselves in the last year, how is that? Those are indicators of how their capital are growing, right? So we're doing more and more to support that use case and make that very, very simple, so that you basically have to do as little manual work as possible. We don't want you taking notes in 3 or 4 different apps to prepare one meeting. We want to centralize and streamline that for you. And the same goes for investments, really. I think our users now are usually condemned to using 4 or 5 platforms. And we want to reduce that to basically OpenTheBox and their own internal system, be it a CRM or some kind of deal sourcing platform.
Yeah. So this is when we were talking about like the banking example, it's really like doing like your research, your preparation, And when you're talking a bit more about the investment side, it's consolidation, bringing everything to like one source of truth. And then also that leads then into like different use cases when you actually have all the information or all the relevant information
Yeah.
in one place. So when we go a little bit into the types of data sources that you guys use or the types of insights that you can actually provide
Mm.
your clients, what can we think about? Because I'm not an investor, I'm not a banker, so I'm
Yeah.
just trying to get like a good understanding of what it is that you guys are actually.
Yeah. So there's a few different financial parameters that you're looking at, but usually every organization has a strategy and has an identity of what they're looking for, what they provide. So if you're an investment fund, for instance, one thing that they'll typically want to look at is how has this company been performing in the last couple of years, depending on which kind of companies you're investing in. A lot of private equity, for instance, is looking at data from at least 10 or 15 years. And then you want to see the evolution across that period. How is it going? Um, do we see that the last name of the person who founded the company is also still in charge of running the company? Then that might indicate that at some point in the future, they are going to have an issue with succession, maybe,
Hmm.
stuff like that. Those are things that that investors are looking for because more and more funds are adopting a very clear identity and a very clear strategy because it's a market where you have to be the first um, for the deal that you want to close. Um, there's ever more funds; they are getting ever smarter. So your time to insight is crucial. It's how you win.
Yeah. Is there like a correlation between being like the first, um, like being the first to contact, being the first that's like having these conversations with the founders of different businesses, and then like like a successful investment, for example?
Yeah, I mean, I think it's not necessarily a measure of how successful it will become. It has an impact on the price of doing a deal. So the sooner you spot the opportunity that you want to be involved in, um, the less likely it is to become an auction. When you wait for a company to come to you, you're probably not the only party they're speaking. And if you wait too long to discover them, then you're probably also not the only company they're speaking with. So being first is important. It establishes trust, but it also gives you a window where you are an exclusive negotiating party without any cost or risk being associated with that. So being the first is really important.
I I can see how that work. Like me as an entrepreneur, I would, even if somebody would contact me, I would still look for potential other partners just to like even the playing field.
Yeah.
But then of course, people on the other side of the table, they're trying to get like, yeah, and you're trying to like stack everything in your favor when it comes to like negotiating or making a deal.
Yeah.
So when we actually look at the information that you're able to provide to your customers, is there like a gap between the information that they might have themselves already versus what you guys can provide them with?
Yeah, definitely. I think so. There are two key phases in every deal, especially increasingly so as more funds become proactive. Um, so that's the part before the deal where you don't get any information from the other party, obviously, because they don't know you might be interested. Um, uh, but then once you start talking, it's important to have a separate public um, um, data set to compare whatever you're being given by the party you're working with in any kind of data room.
Ah,
Yeah,
that's a very interesting. My mind didn't even go there. Like it's not just then using this information to reach out to like businesses that might fit your profile for investment. But then also, once you're actually talking to them and you have your data room
yeah,
where they're sharing their actuals, their information,
yeah,
that you're able to like benchmark this against similar
yeah,
businesses, etc.
yeah,
That's provided.
yeah,
Ah, that's
and
very interesting.
cross reference as well, right?
Hmm.
I think we hope for all of our clients that they never have to rely on OpenTheBox that way. But um, it's important to cross-reference whatever you're getting from the company with whatever can be found online in actually publicized accounts. Because if you're doing deals with small companies, they often don't have auditors. There's been a lot less scrutiny on the numbers. It's just smart due diligence, and even smart to do that as early as possible to look at to cross reference whatever you're getting.
So can you then say like, hey, there are different types of value that Open the Box provides. Um, One, it's like being able to proactively reach out to like ideal investment opportunities. And then on the other hand, perhaps it's like the due diligence side, being able to, like you said, have like cross-reference information that's out there. Am I then missing something, or is there like a different value that you might add to your clients?
I think those are the most important ones. We focus on being the best tool for analysts and deal teams. So that means
Mhm.
we want to help them spot the right opportunities and then build their case around the deal. The actual due diligence comes when, a deal has been agreed
Yeah,
in principle and everything. And then you have to
yeah,
really dive through every contract and everything. Then we're not much more than a supporting tool at that point. And hopefully anything you would have to check at that point has already been checked. But yeah, definitely. I think the information on a company specific level and on a market level is where we specialize. And that basically goes for banking as well as private equity.
yeah. Yeah, but I can imagine that those are actually very two different uh, types of customers that you then serve. Because for for example, an investment company, like, let it be like a venture capitalist or private equity, then of course, it's not just a consolidation, but you're supporting them in their strategy, like the types of companies that they can invest
Yeah,
in, making sure that the information that you have is correct. You can be proactive in reaching out, and then you basically help them in that. And then you mentioned also that you're doing workflow and automation. So how would that then look like? So let's say that I am a private equity fund. And so first off, like you've given me the right information, but then like what happens next?
yeah. So I think there's those two ways of working. So you're either proactive or reactive, and that means you can check and benchmark a company that you might be interested in doing business with. This can be someone on your team that has a good connection, and somehow 'cause a lot of this really still works based on network. So um, here's a company that you find interesting, then you want to check out, how are they really performing in the market? And this then depends on the fund, what that means. But you literally just open the box, and then type in the VAT number of the company and you can start comparing it. So, you can already do that right now. It's a bit more manual work than we have in mind for the pretty near future, where we really just ask you basically beforehand what the kind of stuff is that you want to know about companies. Then you just enter
Mhm.
the VAT number of a company, and every time we will give you that information. So it becomes, instead of an arduous process that can take right now, if you combine all of the different sources, really it could take days. We want to give you most of the information that you actually need, the most important stuff in minutes.
And like this also requires that you have like a very good understanding of what it is that your customers are actually trying to achieve and accomplish. So in what ways do you make sure that you are like a very good partner to them when it comes to the data side? Like, can you maybe elaborate a little bit more on how you capture these insights from your own customers and then translate these into like solutions that
Yeah.
you're building for them?
It's nothing fancy. It's just talking to them. Really.
Right.
Yeah. It's, yeah, it's revolutionary. No, we make an effort to be in touch with them, even if it's a junior analyst at a firm that has interesting stuff to say. We always make time to hop on a call and ask them for more, and we even for funds and customers in general that are more willing to help us improve the product. We make better deals. We make strategic collaborations. So for the ones that really help us drive things forward, we make special efforts, and it goes both ways. We get more from them; they get more from us. I think really any SaaS company should be doing that. Really engage um, with your forward-thinking customers, your innovative customers on a constant basis. There's never, and especially for me as a CRO, there's no excuse to not do that every week.
Like I can fully agree with you on this one. Like, it's also part of course, what we do is making sure that the voice of the customer is heard and
Yeah,
that it's brought into the right conversations when you are making certain decisions.
yeah,
Could be on your product roadmap, it could be on your outreach, it could be on your marketing position, your messaging, whatever it
yeah,
like almost every level in the organization should have a part of the like should have the voice of the customer as being
yeah.
like part of the information that you use. But for me, like the things that you're saying on a high level, they make complete sense. Can you maybe like share a story or like one example that actually where you used this and that is now maybe like a part of your like of the solution that you provide?
Well, I can provide an example of something that we're building uh, right now that we had actually
Ah,
feature specs this morning. So
awesome.
a few months ago, I think, yeah, or a little over a month ago, we were visiting one of our key banking clients in Belgium. And let me put it this way: I think it's important in SaaS you're providing a service. So I think at first, the first thing you do is you have to get really good at understanding the problem your customers face and being able to solve that. And then as you progress, I think you need to understand it better at times than most of them do, so that you can actually suggest improvements that they ideally hadn't thought of yet. So that's what I tried to do in that meeting, was just really go and ask, like, listen, you've asked for this improvement, this improvement, this improvement. We see that you're using our product in this and this and this way. So you're searching, your people are preparing meetings, but you say that they have to prepare a part in your internal software and then a part here, and then they still do this and that. So it sounds like they still kind of have a lot of manual work. Um, and it sounds like not everyone has the same thing that they take with them to a client meet. Would it, for instance, make sense if we would start to build a meeting prep sheet in OpenTheBox where you can combine whatever you find in OpenTheBox about your client with what you have internally? Maybe you have an investment note like which stocks to buy and sell. You know, if all of this information, if you could just consolidate it in one place, and then when they go to their client, they can even print it out. I don't care what the process is, but we built this thing so that you have a unified approach. And actually, we help you improve your process, and our tool becomes a bit more valuable to you. And that's
Yeah.
something that we're working on as we speak.
That's very cool. Yeah, I think what you're saying here, at least how I understand it, is first you need to make sure that you have a very good understanding of what the actual problem is that they are trying to solve.
Yeah.
And in this example that you gave, it was like a process problem
Yeah.
where the amount of steps that they were taking were still like it was a lot of manual work,
Yeah.
and because it's manual work, you see that like the end result that they would come up
Yeah.
with is like it's different. Like it's not, they said it like consistent.
Mm-hmm.
So based on your own internal usage data and the understanding that you have of their current situation,
Yeah.
you are then able to translate that into a solution.
Yeah. Yeah.
That's I think that's a very good way of like looking into how to like prioritize certain things on your product roadmap.
Exactly. And I think there's so for me there's often this crucial misunderstanding, I think, where um either companies follow exactly what a client asks for, and then it becomes very hard to prioritize. How do you build something that everyone will need?
Hmm.
And on the other hand, on the other end of the spectrum is like the Henry Ford quote of, if I had asked people what to build, what they needed, they would have just said faster
Yeah.
horses, right? So,
Yeah.
and that then becomes an argument to never listen to what the customer is actually asking. So you have to be in between, and I think the only solution to that is really understand what they are trying to solve, and then figure out what the best
Exactly.
solution would
Yeah.
be.
Oh, I think you hit the nail on the
Yeah,
head
thanks.
or something. I
Yeah.
don't know. Like I always laugh a little bit when people quote Henry Ford
Yeah.
in this way because it is not like you're really thinking you're in like this solution mindset. But if you understand, like, hey, but what is it that they're actually trying to solve?
Exactly.
Like, oh, they want to get from point A to point
Yeah,
B in a faster or more
exactly.
convenient way or whatever.
Yeah,
And you have different
yeah,
solutions that could solve for what they actually want to achieve.
exactly.
And then, like, if you have a very good understanding of what the problem is and what their desired outcome is, then you can use your own creativity and problem solution or like your own, how
Yeah,
do you say that, like your problem solving skills to
yeah,
come up with solutions that can be very innovative or maybe even very simple.
exactly. We're
But it,
not building rocket
yeah,
science at all. It's probably
uh,
the simplest feature we're ever building so far.
but yeah, but if like simple does not mean that it is not valuable.
Yeah, or easy.
Yeah.
Yeah.
Yeah, yeah. That's a different story.
Yeah.
So,
Right.
okay, so that I think that's very cool. And then there's one thing, if we go a little bit back into what you were saying, like you've mentioned the word proactive a couple of times
Yeah.
already, versus reactive. Um, I'm curious then, but why would you make this? How do you say that? Why do you split those two up? Like, are certain businesses more proactive versus others? Is this something that you hear when you're talking to your customers? Like, no, like they always come to us. We don't have to do like outreach to potential businesses that we want to work with. And do you see like a difference in success maybe also within these firms?
Yeah, I think um I would categorize it as a wave that is probably in a fairly early stage, where especially in mainland Europe, funds are moving to becoming more proactive because of what I said earlier. The more proactive you are, the more likely you are to actually win deals at a good rate. So what we see is actually, um, I think there are funds that are doing well, and have an established way of working that don't feel as much of a need right now to move towards this new way of working. Um, I'm convinced that sooner or later, every fund will be working with clear investment criteria and scoring models because they will be forced to. The correlation is very clear, and um, you need way less analysts, or the typical old school definition of what an analyst does is definitely going to change because um, this involves a lot of manual research. It involves a lot of um, uh, working in Excel, basically, right?
Hmm.
I think the role of an analyst now as a opportunity spotter will move more to um, the role of an analyst as in the deal team where they're building financial models and really projecting like how smart of an investment will this be.
Yeah.
Um, what I see now is that new funds, young funds, are overperforming way sooner um, because of their adoption of
Yeah.
of technologies like these. What I do see also is that they are usually founded by people coming from larger organizations, sometimes even from investment banking, and they are applying this logic to investment, to private equity, to other kinds of funds, because it is now becoming increasingly available with um,
Yeah.
how much more available and approachable machine learning and AI and stuff is. And you can now hire 50 people in India if you need an algorithm.
Yeah. I think what's very interesting to me is that most of the AI solutions that you hear out there, they're let's be honest, they're just like large language
Yeah.
models, use cases, and you are looking more into like the numbers,
Yeah.
which is again that's already quite interesting. And then being able to like separate between like founders versus companies,
Yeah.
that you're also like segment the data that you guys have
Yeah.
and being able to spot trends there. I think that's very interesting because then you're not just helping um, like private banks or investment funds to focus on specific, for example, businesses that they invest in, but then they could even make like an ideal founder
Yeah.
profile, if you want to call it like this,
Yeah.
and then
Yeah.
focus
Yeah.
on that side. So that's I think it's quite interesting. But there is still when you're looking at like the more of like the old school way of working, like there are a lot of analysts, of course, that are part of their team that use stuff like Excel. Do you see that there's like a how do you say that? Like a bit of a friction between them saying like, no, we want to do this ourselves. We have our own internal analysts versus working with a solution like Open the Box.
Yeah. I think at times we do see that it's usually not shared by the analysts though, because they would rather use Open the Box to at least do their work. And I think that's why um, we can actually support companies in most parts of their journey in our ICP if they are um, um, still in the more old school way of working where analysts have to do a lot of the opportunity spotting and they're mostly looking for data. Then you can still do that with Open the Box, and actually their lives still become a lot easier. Most analysts love Open the Box. That's sometimes our entry point to into very nice private equity companies. Um, but um, uh, I think that eventually it will still evolve to more automation and then qualification of what the models will detect. The friction is there. I would say, yeah, and it usually just means we're not talking to the right decision maker yet, or the company needs a few more months.
change is hard.
Yeah, yeah, yeah,
That's for every business, and then especially when you're in a go-to-market
yeah.
function, then you understand that like battling against like a status quo
Yeah.
is something that is very difficult because you have to uh, being able to like identify potential value gaps and being able to like position yourself within that value gap, and then especially when it comes to like these very big investments that these companies make, then like risk is of course also a very important variable they need to take into consideration. So like I think you're active in a field that is very interesting. And I also believe that especially here in Europe, like there needs to be like a lot more money being like thrown into the like into this scene. Like especially when you compare this to the US, for example, where you get a lot higher ticket sizes for investments, and hopefully something like Open the Box can like be a catalyst or to like increase the amount of investments that are being done so that everybody is able to make more money
Yeah.
basically. Um, when you're looking into like the current state of the market and maybe look a little bit into like the near future, like what are some of the biggest challenges that you guys have seen at Open the Box when it comes to your, well, basically your field of expertise?
So do you mean our go-to market or in the market that we serve?
In the like the markets that you serve. So like I'm going to make a distinction between like the banking and the investing. And I think for the banking, um I don't I to be honest, like I don't think my understanding of the private banking world is good enough to ask very smart questions about this.
Uh,
So this could be a very good opportunity actually for me to learn.
yeah,
And then I also think that there are like market changes and trends happening within the world of investments.
yeah,
So I'm just curious. Maybe you can start off with the banking, so I can learn
yeah,
a little bit more about that. Like, what are some of the biggest challenges that they face when it comes to like your
yeah.
solution?
I think there's the challenges are twofold, and they basically create a situation where there is a lot more pressure on the banker. Um, on the one hand, there's increased regulation of on in terms of anti-money laundering regulations, know your customer
Hmm.
regulations.
Yeah.
Um, and there is a lot more pressure also to avoid stuff like, Russian influence, Russian money, foreign money circulating. So, in terms of regulation, we see a lot of pressure increasing in almost every financial profession. So not just banking, but every single one. Um, for basically on the side of compliance. Now, what that has led to, for instance, is the first contact with the client is usually purely administration nowadays. So it's really like reading an ID card. They have to declare all this stuff. So, and you have to keep in mind that this is a service profession. So actually the very first touch point for a customer when they actually decide to become a customer is basically just downright unpleasant.
Yep.
So it makes it very hard really to establish a relationship. That, and on the other hand, especially when dealing with entrepreneurs or people who possess a lot of capital spread over several funds, um, uh, their expectations have gone up of a private banker. First of all, they expect the banker to also be proactive with advice. Whereas in the past, and this is what they straight up tell us, is we were just sitting around in our office and our clients would come to us and say, "Hey, I want to do this or this. What do you think?" That's no longer considered good enough. The market has changed in that respect. Also because there's more competition than ever. There are more different kind of banks, and again, this is a service profession, so it kind of like with brokers or in many service professions, the biggest difference or biggest differentiator is one, your expertise, and second, your level of service. So how good are you? How well do you know your customer? How understood does he feel by you? And those two things. So because there's now so much regulation and your client has a lot of obligations just when wanting to deal with you. And because he expects you to know him very well, Open the Box is a great tool because you're going to get all of this information about your customer without them having to tell you everything. So you remove the burden from your customer to inform you of everything.
Mm-hmm. Yeah.
And at the same time, you get to showcase more expertise, provide a higher level of service, build better rapport. So those are key outcomes that they get from out of the box, from Open the Box. Geez. Yeah, you can cut that.
Nah, we're gonna leave it in. This is a raw podcast.
But those challenges are still. I mean, we are part of the solution, but I think those are big challenges in the market for private bankers. They higher expectations and higher demands both on them and the customers for compliance.
Yeah. So if I summarize this, within private banking, due to increased regulation, stuff like compliance becomes more and more of an obstacle in providing the level of service that is required nowadays. And then being able to provide proactive services. So for example, show me that you know me before we even get to work. And then once we actually work together, being able to proactively engage with me, show opportunities, etc.
Yeah.
And then the role of Open the Box here is being able to provide them with the right information at the right time.
Yeah.
Of course, you're part of the solution, but you're supporting this new level of service that is required to be successful due to increased competition. Okay, that's very, very understandable. And then for the investment world.
Yeah. I think there's a few things happening. So the zero interest rate policy days are behind us. Rates have gone down a little bit, but it means there's a shift into lower risk companies. And that means, a startup is super high risk. We see a lot less investment into startups. And I think, everybody sees this. It's harder for young companies to get funding because there's no proof that you can build a sustainable revenue base. And that was a really good bet a few years ago, but it's become a lot more expensive. So there's a lot less early stage capital, but capital still wants to be deployed. It's the nature of capital.
Yeah.
And at the same time, higher interest rates also mean that legacy businesses that have been been around for a longer time, have a harder time finding capital elsewhere or loans or those things. So there's a bit of a match there, really, between those. What that means, however, for a lot of funds is increased competition. So the same thing, they are going after the same deals, increasingly so. So unless you're the biggest, it's becoming harder and harder, I would say. And even the biggest are becoming smarter because they also don't feel like overpaying. Everyone has an obligation to return value to their investment committee and everyone, the lending partners and stuff like that. So that means that everyone is trying to get smarter. So being first to a deal is one part of the solution, really, to increase your odds of doing a good deal. That's one challenge that funds are dealing with. And then making sense of data. I think I won't be exaggerating if you would reduce OpenTheBox only to scraping data. Most mid to larger size firms can actually perfectly scrape data themselves.
Yeah.
It's become very easy to do that and build a database. It's actually what you do with that data then. That's where a lot of the work comes in. It's not just scraping the data; it's maintaining the data, keeping it up to date. It's searching it in a way that is easy to access. Not to mention that if every fund in the world is spending money on scraping data, probably better off if few companies did that instead and offered it as a service. And then improve on that, because then you can actually move forward and we create more investment in the world. Everyone is better off.
Yeah.
Yeah.
Yeah. So with like changes in the interest rates, like the risk becomes like a bigger variable basically, or is being taken more into account when making investments. Hence, also that you see that early stage capital is becoming harder, or at least for the types of companies that you serve, becomes like
Hmm.
less prevalent, or like less frequently and with less higher
Yeah.
tickets, if I understand it correctly. And that where the added value is for Open the Box is that yes, you can take your own scrapers and create your own data warehouse basically. But the value in data, and this goes basically for everything, is once you have it, like what are you going to do with it?
Yeah.
How do you make sure that if you do the same exercise basically in like a month or two, that again, all your information is up to date. And especially when you say like, yeah, we are also very heavily into like machine learning and analytics. Like this is where you can turn data into insights and that you can then act upon,
Yeah.
because without this data is just numbers
Mhm.
basically.
Yeah.
I think that is very interesting. Like it's a little bit still above my pay grade, but I think
It, it,
it's very interesting. Like
it was above mine, I think, around 6 months ago. So, yeah.
but if in the core you're looking into like, hey, what is it that that our clients are actually trying to achieve,
Hmm.
and what can we do to help them become more successful
Yeah.
in their basically their jobs to be done in their use
Okay.
case in running their businesses, because that eventually they're also just businesses that
Yeah.
trying to make money, but
Exactly.
doing this by
Yeah.
providing capital. So that it's a very interesting field. But you mentioned a little bit like the zero interest rate, and this is also something that is being thrown around a lot when it comes to go to market. So I might want to like take the conversation a little bit away now from the investment side and focus a little bit more on what you as like a chief revenue officer, which is basically being responsible for the go to market motions of Open the Box. So the growth at all cost was very much linked to like the ZERP, or like the
Yeah.
zero interest rate era. Like, do you see any changes for Open the Box when it comes to like the way that you're trying to like increase your own customer base?
Yeah, I think when I started at OpenTheBox, I was already mostly in that mindset of it was clear that the 2021, 22 days were over. Um, um, we were already in a situation where you weren't winning deals as easily.
Mhm.
And the deals you were winning weren't at the kind of um, amount of money that you would have expected a year earlier. So this was late 2023. So it was already clear that things were changing. However, I've always liked the idea of being as profitable as possible. And I think also that basically most of the effects are quite mitigated because we're in Europe and we've never had the kind of capital that US companies have had. Always been a bit different. But I think what we've really done is as far as changes at OpenTheBox go, we have projected downwards the um, uh, our average contract value of an initial deal, because it just makes no sense to shoot for the higher amounts and project for the higher amounts. What we end up doing then is underestimating the amounts of proposals that we need to be sending out. We have instead we're shifting much more to customer success. So we know that a lot more will have to come from land and expand. We're doing a lot more proof of concepts, even for smaller customers. A lot more proof of concept rather than straight to a deal. So there are things that are happening there, and we know that basically our initial deal. I'm not exaggerating that I think that there are times where our initial deal three years ago or 2 or 3 years ago would have been 3 times as high.
Yeah.
So we know we have to work more to get to that amount. On the other hand, if we do it that way, we're less likely to see them churn.
Oh, that's interesting. Yeah, because there's often this correlation, not always causation, but there's like a correlation, like the higher the deal value, that also the less likely they are to churn. Has to do with like, hey, if you spend a lot of money on something, you're probably gonna stick with it.
Yeah.
Um, but I'm curious. You mentioned the proof of concept and the focus on customer success. Has there also been any changes in, for example, like who you focus on when it comes to like your positioning and your messaging, and then how you are trying to onboard them, basically?
Yeah. I think, I think 2 things at once have been going on there, because OpenTheBox also started out as a very generic product, so very horizontal, that tried to serve different verticals. Um, uh, I think that is an increasingly difficult position to take up in SaaS in general, not just down to the end of growth of all costs, growth at all costs, but just in general. I think because of increased competition, if a specialized provider shows up, then you're going to have a tough time. And we see that in company data as well, that basically the ones who specialize and focus on use cases do increasingly well. When it comes to GAAC, yeah, we've definitely narrowed it down very hard. I've always been a proponent of a smaller funnel and a high degree of personalization. We also, we're owned by a major media brand in Belgium, so we have to be very careful with GDPR and everything, regardless. So we've never been aiming at the masses. So in some ways we're lucky because we have had to do that by design. So we're not completely starting from scratch now. We have a very narrow funnel. We focus on we're having a webinar this year, and I've said it already to you before recording. I've also told our marketeer that it's far more important to have the right 20 people there than to have 150 people there, just to be able to say that we had 150 attendees. Really, I would even prefer to host it with 3 people, if they're the right people. Maybe my webinar guests wouldn't be so happy, but I would.
I think that Like it's very much in line with what you just said, right? So you have a very niche slash
Yeah.
focus. That's how I've written it down. Like there's this very specific focus that you have right now. So these are also then like where you can then build your use cases and your solutions around because you focus a specific set of problems
Mhm.
for a specific set of people within a specific set of companies.
Yeah.
Like it's very like niche down. It's really cool. You dropped it. It's like a big ass value bomb. If you want to put it like this, we see from data that the more niche focused businesses are actually thriving.
Yeah.
Which, if you are a founder or an executive within a business, like this is something that you might want to consider instead of doing everything for everyone, which basically means you do something for no one, that you focus on a very specific niche. Like
Yeah.
it's advice that you hear everywhere, but then having somebody here that is actually a data provider
Yeah.
for private owned businesses that is seeing this um, difference, like that is something that is very valuable. And then I think then also what you say, like, hey, we now also do like the proof of concept with also smaller deals, which is again like you're providing value very early on and based on the experienced value,
Mhm.
which you can deliver because you're focused. Like you can see then hopefully that your conversions again increase, even though you're like you said it, like winning becomes less easy. So you're not winning that easily anymore. Maybe your deal sizes might go down a little bit. You're still able to keep them on board.
Yeah.
That's where also you then say, like, hey, our customer success, land and expand strategy becomes more and more important. And as I know, you're a fan of revenue architecture, um, or how do you say, what was it again? Like the
Sure.
recurring revenue is the result of recurring
Yeah,
impact.
absolutely.
Well,
Yeah.
again, it's completely in line with
Yeah.
this as well, which I very much appreciate. So we're actually getting towards like the end of our interview, and there are so many things that I would like to go deeper into with you, but just the time won't allow it. But you have a well, I'm just gonna call it a love for this,
Yeah.
like be focused, be profitable, like rely on providing value over a longer amount of time, make sure your churn goes down. You also mentioned that you are part of like this professional network
Yeah.
pavilion.
Yes.
Has this in any way like influenced your view on like the whole go to market?
Yeah. I mean, I think it's huge in that um it exposed me far more and far faster to revenue architecture. I was able to do the course and get accredited entirely through Pavilion. Um, uh, so it was basically for free because the course would cost more than my Pavilion subscription. um, uh, so yeah, I mean, it's definitely influenced me, and I think in my case, coming from a marketing background into a CRO role, it's been crucial in this kind of fast track of my understanding of things. I've been exposed to so many experts in the local but also international community. That's crazy. It's definitely fast tracked my own development. There,
That's really good. Yeah. We are in no way related to Pavilion or whatever, but I am a very big fan of everything that they put out there.
hmm
Um, I know a couple of guys here in the Netherlands that are also part of the network,
yeah,
and the stuff that they are saying, it sounds really smart, and it's also based on like actual. So I'm for the people that are still curious, I would definitely recommend you to maybe talk to Jona about what it can do for you, or even look at their website because like, I'm even though I'm not affiliated to them, like I am a follower and a fan of what they're doing. Um, So yeah, I always close off the podcast with two basic questions. So I want you to go back to your first day as a CRO at OpenTheBox. What is one thing that you would tell young Jona to keep on doing?
I would say talking to customers, listening to customers. I would even say you waited too long to increase the exposure with customers. I think looking back, I should have done more of that from my first week onwards. It's crazy because I read all of Jason Limkin's posts and Koenstam and everyone, and they all say it. And it's not that I didn't do it, but I should have done a lot more of it.
Yeah, thank you. That's just perfect. That's also, of course, like it's called the Winning with Insights
Yes.
podcast. And like customer insights can more often than not provide you with like basically the solution to every problem that can exist within your business.
Yeah.
Most of them, to be honest, or at
Yes.
least give you like a good understanding of what it is that you actually need to solve for.
Yeah.
And then the other question is, what would you say to young Yona? Like, hey, you need to ditch this immediate. Stop doing
Um, building as many frameworks and playbooks. Yeah, you probably need less than half of what you're setting out. Less meetings, less playbooks, more doing the thing and talking to customers.
it.
Yeah,
Very well. That's a very good advice.
yeah,
Being biased to action,
yeah,
basically,
yeah.
instead of trying to create the perfect process.
Yes,
Well, thank you so much, Jona, for sharing your story here today.
pleasure.
I found it really interesting. I think the market that you guys serve is something that is very important to like the overall like development and growth of businesses here in Europe. Hopefully people were able to actually get like a good understanding of what it is that you do and who you do this for. And if there are any private equity funds or venture capitalists or private bankers listening to this, and you also want to become more proactive and making sure that you have the right information at the right time, how can they get in contact with you or with somebody else at Open the Box?
I mean, I would definitely encourage to just send me a message on LinkedIn. I'm chronically online, so I will get back to you probably immediately. But there are tons of ways. You can also visit our website and send us a message, or you can email me at Jona@box, and then we'll get in
Also, I'm
corner.
gonna make sure that yeah, I'm gonna make sure all the information is in the show notes so that
Nice.
people can actually find you very easily. For now, thank you so much, Jonah, for again sharing your story. And for everybody that is listening, if you want to learn more, look into the show notes, contact Jonah on his LinkedIn because he is chronically
Yes.
online. And for now, thank you so much for listening, and we'll see you in the next episode.
Yes.
Bye.
Thanks, Mike.